The global financial markets whipsaw yesterday after US President Trump public press conference, where he upped his rhetoric of giving a finalized deadline on Iran by today, the today, which is Tuesday, the 7th of April, 8 p.m. Eastern Time. Performance in the global financial markets, we see mixed bag performance, where the West Texas crude oil and the other benchmark, UK Brent crude oil, both rose by around 0.4%, holding above their respective key support level and trading above the $100 psychological per barrel. The US dollar dipped slightly but managed to find support level again at the 20-day moving average as observed by the US dollar index. The US benchmark stock indices marginally rose yesterday but struggled to break above their respective key pivotal resistance level, which we highlighted yesterday. Welcome back to another volatile session again, pretty much potentially likely given that we are now on the brink of a potential further escalation in the US-Iran war/conflict. Very good morning to all. I'm Kelvin here. Welcome back to today's Daily Dose of Market Insights. Today will be the Tuesday, the 7th of April, 2026. So as usual, let's have a quick look at the disclaimer first. Leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is for general information purposes and is not investment advice. Past information is not representative of future results. All right, so here we go. So on the first segment of the Daily Dose as usual, let's have a quick recap what has taken shape yesterday and as well as in today's early Asia session in terms of the relevant macro data / event and as well as their respective impact on the intraday movement of the broad-based cross-asset classes that we cover on a frequent basis. So let's start with the situation surrounding the US-Iran war/conflict. So hopefully my screen could see. All right, so let me expand my screen to the other segment. Yeah, good. All right. So yesterday, US President Trump has a public conference to the media at 1 p.m. Eastern Time. That means Singapore time will be 1 a.m. on Tuesday, 7th of April. So what he did mention is that primarily he's focusing more on the successful rescue mission where the US Armed Forces managed to retrieve two US air servicemen that got shot down by their respective airplanes over the weekend in Iranian soil. He also ups the threat to take out Iran before Tuesday deadline, which is today. Right, so okay, let me expand the screen so that you guys could have a better view. Yeah. So US President Trump threatened to attack Iranian civilian infrastructure. So civilian infrastructure that includes potentially housing, bridges, and most importantly, energy plants to totally destroy Iran's economic structure if the country does not reopen the Strait of Hormuz by the deadline of 8 p.m. on Tuesday, so which is today. So 8 p.m. will be 8 p.m. Eastern Time. Singapore timing will be tomorrow, Wednesday, the 8th of April, 8 a.m. Singapore timing. And by upping his ante, Iran, through its official channel, which is via the Islamic Republic News Agency, totally rejected a ceasefire proposal demanding a permanent end to the war. So it appears that both sides of the stakeholder does not agree to certain elements, and there is so far no common ground that is being found in this ongoing US-Iran war/conflict that is now entering into its 39th day over here. So this conflict so far has continued to cause a global energy crisis with oil prices rising, and that potentially could lead to demand destruction and leading stagflation fear as well. And this particular scenario has now been reflected in one of a tier 1 US economic data, which is the ISM services PMI. So let me take you through this data over here. So yesterday we see the release of the ISM services PMI at 10 p.m. Singapore time yesterday. So why this is considered as a tier 1 USA economic data? Number one, is a leading economic data because this is soft data. survey based by the ISM institution sending out a set of question or survey to related purchasers, a purchasing manager in the services industry. So they are able to get a feel and sentiment of how the businesses are coping with various economic factors slash situation at that juncture. So this is for the month of March over here, which is just last month. So that also take into account of the US-Iran war conflict that has taken shape in late April, which is 28th of February to be precise. So this ISM services PMI data, why? Firstly, is survey-based, which is a leading economic indicator. Secondly, it covers a wide scope of a significant sector in the US economy, which is the services industry. And the services industry contribute close to 3/4 of US economic growth. That means if this services PMI is showing signs of growth deceleration, it could imply that hard data down the road will start to show economic decline, because this is being a leading economic indicator. And it indeed starts to show growth decline by seeing the numbers that came in below expectation. So previous month was 56.1, which was in February. Market consensus expected to be at 55, just only a slight decline, but it declined much more worse. It came in at 54, which is 2 points below over it. And what's pretty much concerning will be their sub-component, which is the services employment over here. So services employment survey the job prospects within the services industry. So services employment contracted. So for PMI data, anything that's below 50 is showing contraction. Previous month was 51.8. It contracted to below 50, came in at 45.2 for the month of March. And also there's another sub-component that measures the cost of doing business or the cost of business inputs within the services industry in the US. They call it the ISM services prices paid sub-component for March. It continues to accelerate from 63 to 70.7. All right. So let me share with you the data over here. So this is the ISM services PMI. It fall to 54 over here. So that is the level that was seen almost in December last year and February and January this year. All right, after a strong push up to 56.1 in February. And pretty much concerning will be the ISM services prices. So like I mentioned, this is the cost of business, the business input cost for the services industry in the US. So the prices paid index, the ISM prices paid index surged to 70.7 in March. So that is the highest since October 2022. So if you look at this rapid increase that surpassed the previous peak of July 2025 at 69.9 over here. So after showing deceleration from July last year all the way down to February, that was before the US-Iran war kickstarted in late February, 28th of February. And right now, after taking into the situation that is unfolding in the Middle East, the ISM services prices paid shoot up rapidly. And this shoot up rapidly, and this shooting up rapidly on the ISM services prices and the slowdown in growth in the headline ISM services PMI to 54, that indicate stagflation risk is rising. All right, so once we start to see stagflation risk, that means i.e. cost of businesses is rising, coupled with economic growth prospects slowing down. The US central bank, the Fed, hands will be tight over here. That means they could not continue their interest rate cut cycle, because by cutting interest rate, it will increase inflationary pressure much higher. So they will rather adopt a wait and see approach. And if cost of doing business or inflation trend keep on going up higher and higher, very likely they may be forced to introduce a small interest rate hike. All right. So that being said, it will create a liquidity crunch into the US economy. And that is continue being seen on the CME Fed Watch 2, where the CME Fed Watch 2 managed to get a pricing odds of whether the US Federal Reserve will hike, hold, or cut rates in the various FOMC meetings by taking a look at a calculation of the various Fed funds futures contract as being implied by the trading price action behavior of the Fed funds futures traders. So this is the latest CME Fed Watch 2 pricing. What you could see over here is that the horizontal column over here represents the various Fed funds rates, and this is the various Fed funds meetings down the calendar. So at the moment, the Fed funds rate is at 3.5% to 3.75%. So what we could see, the next meeting, which is on April 29, all the way up to the end of this year, which is the last meeting date, will be December the 9th, all showing high chance of above 90% on the average that the Fed will be on hold. All right, at 3.5% to 3.75%. If you recall, the Fed kickstarted its interest rate cut cycle late last year by cutting rates 3 times so far. And what's interesting over here is that right now we see more increasing odds of the US Fed funds futures traders pricing in a slight chance that the Fed may introduce a rate hike on the 28th of October, which is at a 12% chance. So previously, this chance was less than 5% yesterday, which I highlighted. So after that, ISM services price subcomponent rose to the highest level since October 2022. That pricing odds of a interest rate hike slightly increased to 11 to 12%, based on the Fed funds futures traders pricing behavior as calculated by the CME Fed Watch 2. That is being penciled in on the October the 28th FOMC meeting. And we only see higher chances that the Fed will resume its interest rate cut only next year, and it will be late next year, which is on the September the 15th, 57% chance the Fed will introduce a 25 basis point cut to bring the Fed funds rate down to 3.25% to 3.5%, and a higher chance will be on the October the 27th, 2027 FOMC meeting, which has a 66% chance being assigned. So what we could see over here is that the Fed funds futures market is calling for no interest rate cut this year, more stampede, but a slight chance that the Fed may introduce a hike of 12% chance on the October the 28th meeting, and the next interest rate cut will be priced in way next year on the September meeting or on the October meeting next year. So that increases the risk of a liquidity crunch in the US economy that should be detrimental to the US stock market, where if you start to see the US futures market is trading down right now. So as you are speaking right now, Asia session Singapore time 11:14 a.m. the S&P E-mini futures is down by negative 0.46%, trading near the session low at 6,620 level. Similar for the Nasdaq 100 E-mini futures is down by negative 0.61%, also trading near the session low at 24,210. All right, so that kind of have a bearish reversal after yesterday's positive close of 0.44 on the S&P. The Nasdaq 100 closed at 0.61, the Dow Jones closed at 0.36, and the Russell 2000 closed at 0.4. But however, later I'll share with you the charts of the SPX, the Nasdaq, and the Dow Jones Industrial Average. All three of them struggled at their key respective short-term pivotal resistance, which we highlighted yesterday. Onward next will be the US dollar. So we could see is that the US dollar continues to rally in today's Asia session. All right, so the dollar is the strongest against the Kiwi and strongest against the Japanese yen right now as we are speaking, up by positive, the dollar is up by against the Kiwi positive 0.8% and up by against the Japanese yen positive 0.7%. Then if you were to look at the one-day rolling performance, taking into account the last 24 hours, the dollar is also up pretty much sharply as well since 8:30 a.m. Singapore time today, and right now it's doing a bit of price consolidation. All right, but it's still up sharply from 8:30 a.m. Singapore timing. All right, if you look at the US dollar index, it continues to shape a bounce after intraday sell-off that was being seen on Monday, which is yesterday over here. But that black candlestick managed to form a tail where it managed to form a bounce right exactly at the 20-day moving average, and also confluencing with this ongoing ascending trend line support taken from the year-to-date low for today, which is year-to-date low for this year, which is the swing low of 26th of January 2026. So what you could see over here is that is being supported, the US dollar index being supported by the 20-day moving average and this key ascending trend line support. But however, every time it hit the upper limit of this key complex sideways range configuration that has been in place since late May last year, which is at 100.54, there's a bit of profit taking. So it's more like a sideways rangy configuration for the US dollar index over here. So given this sideways rangy configuration, so potentially we may see a bit of what I call that range bound configuration within those set key intraday levels that we highlighted previously on the 4 major US dollar pair. Onward next will be the oil prices, which is very, very important. So what I could see is that the oil prices on the West Texas crude oil continues to remain very, very strong. So what we could see is that yesterday price action continues to close higher at 0.42, as now it's trying to en route to retest the 9th of March key medium-term swing high at 119.54. So that's the West Texas crude oil. So net overall, price action continues to remain bullishly constructive since the gap up on the 2nd of March, gapping above the key former major descending resistance from 28th of September 2023 high, and continues to trade above the rising 20-day and the 50-day moving average, indicating that the medium-term bullish uptrend phase continues to remain intact for the West Texas oil. So if oil prices remains in this kind of bullish trend, eventually it means that stagflation risk still remains intact over here. That is potentially detrimental to stock indices in general, positive for the US dollar in some form, at least in the near term, and negative for precious metal like gold and silver, where we start to see gold and silver trading much lower today. So as we are speaking right now, Singapore time 11:19 a.m. Very quickly, let me share with you. Gold is down by negative 0.13%, and silver is down negative 0.7% over here, being the fact that they are not trading like a safe haven currency, safe haven asset, but trading more like a risk asset for gold and silver. Why? Because of the stagflation risk component, where if stagflation risk continues to get higher, it means that the US Federal Reserve may not even cut rates and may also introduce interest rate hikes, where interest rate hike is being occur or justified or materialized, that could increase the holding cost of holding gold and silver, as both these precious metals are non-interest bearing assets. All right, so that's the first segment of the daily dose. Now let me move on to the second segment, which is the intraday technical outlook segment. So with that, let me expand my screen. All right, so let me now touch on the charts, starting with the FX market. Okay, give me 1 second. Okay, let me start with the euro dollar. So euro dollar, still recall yesterday, from a better risk management perspective, we tightened the pivotal support from 116.35 to 115.73. And indeed, this is a pivotal resistance. Okay, we tightened the pivotal resistance. Pardon me, a bit of tongue twisting. Let me repeat again. Yesterday, we tightened the pivotal short-term pivotal resistance on the euro dollar from 116.35 to 115.73 for a better risk-reward management perspective. And indeed, the 115.73 is a short-term pivotal resistance level, where price action yesterday rejected exactly at the 9 p.m. Singapore hour mark, all right, at the 2200 hour, which is it's 10 p.m. Singapore mark over here, all right. It rejected exactly at this level. So continue to maintain that bearish bias. 115.73 short-term pivotal resistance level. Downside trigger level will be yesterday's swing low area during the Asia session, which was also the swing low on last Thursday as well, 115.05. Breaking below 115.05 may potentially see further potential weakness to test the minor range support level that has been formed on 19th of March, managed to survive on the 31st of March. That will be at 114.55. All right. So these are the two key support level to watch on the euro dollar for today, while we maintain a short-term intraday bearish bias view using 114.73 as the short-term pivotal resistance level. Only breaking up an hourly close above 115.73 will invalidate today's intraday bearish bias view to see a squeeze up to retest 116.35 again. So 116.35 is the minor swing high area of 23rd of March. Came in very closely on 1st of April as well, and also close to the medium-term descending trend line that has been in play since 10th of February 2026 high. All right, so that's for the euro dollar. Next up on the sterling pound. So the sterling pound also rejected exactly at our short-term pivotal resistance zone, the lower limit 132.72. 132.95 over here. So still maintain a bearish bias view on the sterling dollar over here. So this sterling dollar could be potentially trading in a descending triangle range configuration as price action flash out a lower high over here with the descending range configuration support coming in at 132.20, 131.60. So still maintain a bearish bias view for it to retest the potential minor descending triangle range support level at 132.20, 131.60. Breaking below 131.60 may see a range bearish breakdown to expose the next support level at 131.25. If you go back down, 131.25 is the congestion area of 20th of November and 26th of November last year. Only a bullish breakout above 132.72/132.95 that would invalidate the bearish bias view to see a squeeze up towards 133.47, 133.70, which confluence with the descending channel resistance that has been in play since the high of 28th of January this year. All right, so that's for the sterling dollar, still maintaining a bearish bias view for it to potentially retest this ongoing descending range configuration support zone at 132.20, 131.60 in the first step. Next up will be the Australia dollar, the Aussie dollar. So the Aussie dollar also get rejected at the pivotal resistance zone that we highlighted, 69.10, 69.38. So still maintain a bearish bias view of 69.10, 69.38. Two key support level to watch will be 68.83, which was yesterday's low over here. Breaking below 68.83 may potentially retest the previous Monday low of 30th of March and the previous Tuesday low of 31st of March at 68.38. Only breaking down below 68.38 may potentially see a bearish breakdown towards 67.80, 67.60, which is the former swing high of 7th of January 2026, and also confluence with the lower limit of this descending channel in place since the high of 11th of March, and as well as a 1.618 Fibo extension of the downside. And it appears to me that this Aussie dollar also could be trading in a descending triangle range configuration with the descending triangle range support coming in at 68.38. Only a bullish breakout above 69.38 that would invalidate the bullish bias, that would invalidate the bearish bias view on the Aussie dollar, pardon me, exposing 69.80/70.15, which is the 20-day moving average, and also confluencing with the 50-day moving average as well. So still maintaining a bearish bias view, or still maintaining a bearish bias view on the Aussie dollar using 69.10, 69.38 short-term pivotal resistance as it potentially evolve in a minor descending triangle range configuration. Breaking below 68.38 will expose the minor descending triangle range support level at 68.38. All right, if you start to break down below 68.83 over here. All right, next up will be the dollar yen. Okay, so dollar yen yesterday we do have a bearish bias view. So the bearish bias view hit the first support level at 159.35, but can't break down below 158.95 and now try to trade higher, testing 159.95, which is our short-term pivotal resistance yesterday. As what you could see is that the dollar yen continues to hold firmly above this rising 20-day moving average. And what you could see now is that the hourly RSI also starts to do a bullish breakout. All right, as we are speaking right now at 11:26 a.m. Singapore time. See, there's a bullish breakout over here, and prior to that, we start to see a series of higher low. All right, so indicating that short-term bullish momentum has started to resurface on the dollar yen. So with this short-term bullish momentum resurfacing on the dollar yen, we will have no conviction to maintain that bearish bias view anymore. So instead, we will flip to a bullish bias for today on the dollar yen using 159.35. So using 159.35 as my short-term pivotal support level, breaking above 159.95 will potentially seek out the one of the key risk intervention level of 160.74, where previously the Bank of Japan was being instructed to sell the dollar, buy back the yen at the 160.74 level 2 years ago. Only a bearish breakdown below 159.35, which is also breaking down below the 20-day moving average, which is coming very close to it, will invalidate today's bullish bias view to kickstart a minor corrective decline sequence in the first step, exposing 158.95 followed by 158.42, 158 figure level. All right, so that's for the dollar yen. Next up will be the major stock indices. All right, starting with the Hong Kong 33 here. So I reckon the Hong Kong 33 is still closed for a public holiday today. So the level still remains the same, 25,380 level to watch. That will be the key resistance level when the market reopens against tomorrow. First support level 24,830/24,765. So breaking below it will retest the swing low area of 23rd of March and 30th of March at 24,257. Next up will be the Japan 225 that is representing the Nikkei 225. So the Japan 225 potentially, like highlighted, is now trading in a minor descending triangle range configuration since the high of 11th of March. And price action rejected exactly at the upper limit of this minor descending triangle range configuration yesterday, which is at 53,628, 54,095. So still maintain that bearish bias view on the Japan 225, breaking below the first support level of 52,070 may potentially expose a retest to this minor descending triangle range support area at 50,630, 50,160. Only a bullish breakout above 54,095 and the hourly close above it will invalidate this potential push down towards the lower limit of this minor descending triangle range and see another leg of complex corrective rebound, exposing the 50-day moving average at 55,130. Above it may see a further squeeze up towards 56,520, which is the congestion area of 23rd of March and 5th of March, and as well as the golden ratio 61.8 Fibo retracement of that previous sell-off from the all-time high of 26th of February all the way down to the low of 30th of March at 61.8%, confluencing very closely at 56,520. That's our medium-term pivotal resistance level. All right, so net overall, still maintaining a bearish bias for the Japan 225 below 53,628, 54,095, as is potentially now try to do a push down towards the bottom of the minor descending triangle range configuration. Right over here. Next up will be the Germany 30, which is representing the German DAX over here. So the Germany 30 also did a reaction of the upper limit of our short-term pivotal resistance that we highlighted yesterday, 23,280, 23,490. So no change, still looking at a potential push down to revisit the minor congestion area that has been formed since 26th of March and 31st of March at 22,630. Only a bearish breakdown below 22,630 may expose further weakness towards 21,930, 21,830 over here. However, a bullish breakout above 23,490 and the hourly close above it will invalidate this bearish bias view to see a further corrective rebound phase unfolding towards 23,930 and even 24,300, which is my medium-term pivotal resistance level. So that's for the Germany 30. Next will be the US Wall Street 30 that's representing the Dow Jones Industrial Average. So the US Wall Street 30 also hit our pivotal resistance zone. It did a bearish reaction below it as we are speaking right now, 11:31 a.m. Singapore time, and also did a bearish reaction of the 200-day moving average, which it did previously on the 23rd of March, the 25th of March, and the 1st of April. So this zone here is very critical: 46,710, 46,970. So still maintaining that bearish bias view. Three key support level to watch out for today will be at 46,194. Breaking below it will expose the swing low of last Thursday before we start to see this recent rebound, which is at 45,940. Only breaking below 45,940 will expose further weakness for the next near-term support level to come in at 45,565 in the first step. Only a bullish breakout above 46,970 will invalidate the bearish bias view. Pardon me. Only a breakout above 46,970 will invalidate the bearish bias view to see the continuation of this corrective rebound to test the medium-term pivotal resistance level at 47,460. So 47,460 also confluence with this key descending. Oops, sorry. Okay, where was I again? Okay, give me a minute. Okay, sorry about that. Let me go back. Yeah, so this 47,460 is also the key descending trend line resistance from the all-time high of 11th of February. Okay, also confluencing at the medium-term pivotal resistance of 47,460. Okay, next up will be the SPX 500. So the SPX 500 did a bit of whipsaw at the 6,600 level, and before it trade, give me a minute. Yeah, let me delete it. Before it trade down below at 6,600 again in today's early Asia session at 6,592 as we are speaking right now, 11:33 a.m. Singapore time. So instead, I will tolerate the excess. So I give it a bit of range over here. All right, between 6,600 and 6,648. All right, give it a bit of range. So I just put it down at 6,648. Which is also just below the key 200-day moving average. Okay, so give it a bit of excess here. Okay, so still maintaining that bearish bias view on the SPX 500. Okay, with the excess at 6,648. Two key support level to watch: 6,533. Breaking below it may expose 6,455 next. Only a breakdown below 6,455 may seek out 6,388. Only a bullish breakout above 6,648, which is so potentially breaking above the 200-day moving average, may see a squeeze up towards the medium-term pivotal resistance level at 6,730. So that's for the SPX. Next up will be the Nasdaq 100 over here. So the Nasdaq 100 also did a bit of whipsaw at around the 24,177 level over here. So what I'm going to do is that it's actually managed to form a rejection right below the pivotal resistance level at 24,355. All right. So what I'm going to do is that I will watch this zone pretty closely. So 24,177 / 24,355, which is almost got rejected yesterday, which is printed high of 24,299, which is very close below 24,355. So this appears to be a key resistance zone between the short-term pivotal resistance and the medium-term pivotal resistance at 24,355. So still maintaining a bearish bias view on the Nasdaq 100 over here. And given the fact that if you look at the Nasdaq 100, if you look at the hourly RSI, it's now breaking below a parallel key, former key ascending trend line support. And yesterday, it printed out a bearish divergence. Okay, notice we see a lower high. Okay, indicating the lack of upside. Come on. Okay, indicating the lack of upside momentum. All right, so whatever rebound that we see yesterday is more like a dead cat bounce, failing to break above the key resistance zone of the short-term pivotal resistance and the medium-term pivotal resistance at 24,177, 24,355. So still maintaining that bearish bias view. First support level to watch, 23,830. Breaking below it may expose 23,400 next. Only a bullish breakout above 24,355 will invalidate the bearish buyer's view to see a squeeze up to test the 200-day moving average at 24,537. Breaking above 24,537 may see a further push up towards 24,900 next. So that's for the Nasdaq 100, still maintaining a bearish buyer's view. Next, the commodities market, starting with gold XAU/USD. So gold XAU/USD continues to remain below our medium-term pivotal resistance, which is also the downward sloping 20-day moving average at 47.37, 47.75. So continues to have that bearish buyer's view. Watching very closely the first support level at 45.95. So 45.95 is indeed a very key support level. One, we managed to find support level on last Thursday, and as well as on yesterday's Monday Asia session, and that also confluenced with the lower limit or the minor bearish flag ascending trendline support. So breaking below 45.95 will indicate a minor bearish flag breakdown. So once a minor bearish flag breakdown, that will resume its medium-term downtrend phase that has been in place since 2nd of March this year. Right, another leg of the medium-term downtrend phase. So breaking below it will expose the next near-term support level in the intraday basis. In first step, 45.24, pardon me, for the 486. Then breaking below 44.86 exposes 43.19, okay, or 4,319. Only a bullish breakout above 47.75 that would invalidate the bearish outlook on the gold XAU/USD to see the continuation of this corrective rebound unfolding further towards the upside, potentially seeking out 48.60. Above it, potentially exposes or see the next intermediate resistance zone coming in at 49.80/50.39, which confluence very closely with the 50-day moving average as well. Next up will be the West Texas crude oil over here. So let me go to the hourly time frame. Right, so hourly time frame price action managed to hold firmly above our Titan short-term pivotal support level yesterday, 107.11. Hourly RSI managed to bounce off from that former descending trendline resistance, now turns into a pullback support at the 50 level exactly. No signs of a bullish exhaustion. So price action continues to remain constructively bullish at this point in time, potentially. So first support level to watch will be yesterday's low that has been formed during the London hours at 3 p.m. Singapore time, okay, which is at 109.58, right, 109.58. Its price action managed to clear above 119.54, which is the 4-year high that was printed on 9th of March this year. I will tighten slightly the short-term pivotal support from 107.11 to 109.58. All right, next resistance level to look out for will be a bunch of Fibo extension cluster level, confluencing with the previous graphical swing high of 8 and 14 of June 2022, 124.40, followed by 131.30/132.67. So that is the highest level that's been seen during that Ukraine-Russia conflict that was being heated up on 7th of March 2022. All right, only a bearish breakdown below 107.11 will invalidate the direct rise bullish bias view to see a minor setback to 102.25. So this minor setback 102.25, which is also the lower limit of this steepened minor ascending channel drawn from the low of 25th of March. So if price action hit 102.25, I'll be also on the lookout for a bullish reversal candlestick to maintain my bullish bias view again. All right, so that is for West Texas Oil, still maintaining our bullish bias view with 2 support level to watch for today, 109.58 followed by 107.11, currently our short-term pivotal support level. All right, so that's for West Texas Oil, and that also sum up all the intraday technical outlook on the broad-based cross asset classes. So before we go, let's have a quick look at the economic calendar. What are the key data to look out for today over here? So key data to take a look at once the European session kickstart will be pretty much quiet, nothing interesting. And in fact, during the US session, there's no other tier one data to look out for as well over here, other than on Wednesday at 12:35 a.m. Singapore time, we have one Federal Reserve official speaking. Fed Goolsbee will be speaking, followed by 5:50 a.m. Singapore time, Wednesday, 8th of April. Fed Jefferson will be speaking. And as we unroll the Asia session on 8th of April, Wednesday, we have RBNZ interest rate decision that will be at 10 a.m. Singapore time. And do not forget the all important news flow will be this deadline that is given by US President Trump, where he give a ultimate, this should be the ultimate deadline, because yesterday when the press kind of interviewed him, he said that he will not likely to extend any deadline much further. So this deadline will be on Tuesday, which is today, 7th of April, but at 8 p.m. US time. So 8 p.m. Eastern time, US time. If you convert it to Singapore hours, that will be on Wednesday, 8th of April, 8 a.m. Singapore time, which is very important. So this is the mother of all events for tomorrow. All right. So with that, that sum up today's daily dose of market insights. I'm Kelvin here, signing off. And I also need to give a heads up for you guys. Tomorrow I'll be away. So I'll be away from 8th of April all the way up to 15th of April. And daily dose will only resume again on next Thursday, which is on the 16th of April. With that, do practice proper risk management, as the markets will be likely to be volatile, and in the intraday basis, it will be continues to be governed by changing narratives coming out from the US-Iran war/conflict. Thank you.